She had 6 months of demo results that any fund manager would envy. 43% return, disciplined entries, clean exits, maximum drawdown under 4%. She was ready. She funded a live account with $5,000, modest, careful, responsible. By week 3, she had lost 30% of it, not because the market changed, not because her strategy failed, because she discovered, for the first time, that she was terrified of losing $5,000. She hadn't known that about herself. Demo had never told her. The market told her on day 1, in the cruelest possible way. Mark Douglas would have said, the market didn't reveal her weakness, it revealed her truth. And that distinction matters more than almost anything else I'm going to say today. Because weakness implies something broken, something that needs to be repaired or overcome or pushed through. Truth is different. Truth is information. Truth is the starting line. The fact that she was afraid of losing $5,000 wasn't a flaw in her character. It was accurate data about her psychology that demo trading had systematically hidden from her for 6 months. And here's the thing that most trading education never tells you. Every single one of those profitable demo sessions wasn't just training her strategy. It was training her to be someone she wasn't. Someone with no cortisol in her bloodstream. Someone with no real consequence attached to any outcome. Someone whose hands didn't feel cold when a position moved against her. She trained that person for 6 months and then was surprised when that person didn't show up when the money became real. But of course, that person didn't show up. That person never existed. This is the core of what I want you to understand today, and I want to deliver it plainly because it matters. Demo trading does not make you a better trader. It makes you a better performer under conditions that will never exist in live trading. The calm you feel in demo is not equanimity. It is the absence of stakes. And those are not the same thing at all. Equanimity is the ability to remain calm in the presence of real consequences. That is a psychological skill built through exposure to real consequences, not through the careful avoidance of them. The gap between your demo results and your live results is not a strategy gap. Your strategy is probably fine. The gap is a self-knowledge gap. You spent 6 months learning what you can do with no consequences attached, and you never once learned what you do when the consequences are real. And the only way to learn that is to face consequences that are real. Let me give you a way to think about this that I find clarifying. When you trade in demo, only one version of you is in the room. Call this version the analyst, the part of your mind that can read charts, follow rules, think probabilistically, execute mechanically. The analyst is smart and disciplined and capable. In demo, the analyst has the floor entirely to itself. But the moment real money enters the equation, a second version of you walks in. This one is older and louder and doesn't give a damn about your trading system. Call this one the survivor. The survivor's only job is to protect you from loss, from any kind of loss, financial or social or psychological. The survivor is the part of you that tightens your chest when a position moves against you. The survivor is the part that tells you to get out before your stop is hit because it cannot tolerate the feeling of waiting to see what happens. The survivor is the part that turns a disciplined trading strategy into a series of impulse decisions dressed up in post hoc rationalization. Here's the critical thing. The survivor is not irrational. The survivor is doing exactly what it evolved to do. It is protecting you from perceived threat. The problem is not that the survivor exists, every human being has one. The problem is that in demo, the survivor had no reason to show up. No money on the line, no real loss possible, no genuine threat to respond to. So you spent 6 months training the analyst in a room the survivor never entered. And then you went live, and the survivor was there from the first second, and the analyst, unpracticed at operating in the presence of the survivor, struggled to be heard over the noise. This is what Mark Douglas was pointing at when he talked about the difference between intellectual understanding and experiential belief. Intellectually, you understand your system. You understand probability. You understand that a single losing trade is irrelevant to your long-term edge. But experientially, under pressure, with real money moving in the wrong direction, the survivor overrides the analyst before the analyst can even finish its sentence. And you make a decision that you will look back on and not quite recognize, a decision that doesn't match who you thought you were, doesn't match the disciplined trader you were in demo, doesn't match anything you consciously intended. That's not weakness. That's the survivor doing its job in an environment where its job is not helpful. So the question is not, how do I become a better demo trader? The question is, how do I introduce myself to the person who shows up when it counts? How do I learn what the survivor does under pressure so that I can begin gradually, systematically, to work with it rather than being ambushed by it every time real money is at stake. Start trading live tomorrow. I mean that. Don't spend another month in demo thinking you're building something you're not. Go live. And this is the resolution of what might sound like reckless advice, go live with position sizes so small they barely register as real money. Not so small that there's no consequence at all. Small enough that your nervous system begins to register the difference between demo and live, but not so large that the survivor takes complete control and you can't observe yourself at all. What we're doing here is a calibrated introduction. We are deliberately creating the conditions under which the survivor shows up because we need to meet the survivor. We need to learn its triggers and its patterns, but we are keeping the stakes low enough that we can stay conscious and observational while it's happening. Here's the practice. This is the microlive protocol, and I want you to treat it as a tool you now own. Open a live account if you don't have one, open one today, and fund it with a fraction of your intended trading capital. If you eventually plan to trade with $10,000, fund this account with $500. Trade the same setups you've been trading in demo. Follow the same rules. But at position sizes that are roughly 1/10 of what you would eventually intend to trade. And then, after each trade, not at the end of the day, after each trade, write one sentence in a notes app or a notebook. Not about the result, about how you felt. Just one sentence. Something like, felt anxious when it moved against me by 5 pips, wanted to close early, or felt nothing, executed cleanly, no emotional reaction worth noting. Or had to physically stop myself from moving my stop loss when price approached it. One sentence, just the emotional data. Do this for 30 trades. The goal of those 30 trades is not profit. The goal is the 30 sentences. Because those 30 sentences are a map of the survivor. They tell you exactly when it shows up, how loud it gets, what triggers it, and how quickly it passes. And once you have the map, you can navigate. Now I want to go deeper, because there's something underneath the microlive protocol that matters just as much as the protocol itself. And that's the question of why the survivor is as loud as it is. For most traders, the loudness of the survivor in live trading is not proportional to the amount of money being risked. I've seen traders become completely paralyzed by a $50 floating loss on a $1,000 account. I've seen traders in the microlive protocol, trading genuinely tiny position sizes, experience the same chest tightening, the same impulse to close early, the same second guessing of their rules that they would experience trading full size. And that tells you something important. The fear is not really about the money. The money is the trigger, but the fear is about something else. For most traders, that something else is identity. What a loss means about them. What a string of losses means about whether they are capable of this, whether they belong here, whether they are smart enough, disciplined enough, worthy enough to succeed at something this difficult. This is what Mark called the identity stake problem. And it is the reason that demo trading is so much calmer than live trading, even when the position sizes are identical. In demo, your self-image is not on the line. You can lose 10 times in a row in demo and it means nothing about who you are, because you both know and feel that it's not real. The moment it's real, every loss carries a passenger. The question of what this means about you and your nervous system is not just responding to the financial loss. It's responding to the threat to your self-concept, to the possibility that you might be someone who fails at this. And that threat, for most people, is far more activating than the actual dollar amount would justify. Here is the second practice to add to the first. In the 10 seconds before you enter any live trade, not any demo trade, live only scan your emotional state and name what you're feeling. Just name it. Curious, anxious, excited, confident, impatient, uncertain. One word is enough. Don't analyze it, don't judge it, don't try to change it. Just name it. Research in neuroscience consistently shows that the act of naming an emotional state, what scientists call affect labeling, reduces the intensity of the amygdala's response to that state. Naming the emotion activates the prefrontal cortex, which is the part of your brain that can actually think clearly and make decisions based on your trading rules rather than your survival instincts. So this 10-second practice is not just a mindfulness exercise. It is a neurological intervention. You are literally, in a measurable way, shifting processing from the part of your brain that reacts to the part of your brain that reasons. And in trading, that shift can be worth more than any technical improvement to your system. Now let's talk about consistency, because this is the destination we're all trying to reach, and I think most traders have a mistaken picture of what it actually looks like. Most traders imagine that consistent trading means consistent results, consistent profit, a smooth equity curve, winning weeks followed by more winning weeks. But that's not what consistency means. And chasing that picture is one of the things that keeps traders stuck. Mark was very precise about this. Consistency in trading means consistency in thinking. It means applying the same framework, the same rules, the same psychological approach to every single trade, regardless of recent results. A trader who is genuinely consistent might have losing weeks. They will definitely have losing streaks. They will have periods where the equity curve goes sideways or down, and it will feel like the strategy has broken even when it hasn't. But a genuinely consistent trader keeps executing through all of it, not out of stubbornness, not out of ego, but out of genuine understanding that short-term variance is the price of long-term edge. Consistency in thinking is what produces consistency in results over time. But the results lag the thinking, sometimes by weeks, sometimes by months, and most traders quit the thinking before the results have time to arrive. And this brings me to what Mark called the carefree state, which is the destination of all of this work. The carefree state is not carelessness. This is the misreading that leads traders astray. The carefree state is the natural result of genuinely, experientially believing in your edge, not just knowing that your system has a positive expectancy, not just having the back test to prove it, but actually feeling in your bones that over any sufficiently large number of trades, your edge will express itself. When you carry that belief, when it has become as natural and automatic as breathing, then individual trades lose their power over you. A loss is just a loss. An expected event in a probability distribution, no more significant than tails coming up on a coin flip. A win is just a win, evidence that the distribution is operating normally. Neither outcome produces strong emotion, because neither outcome threatens your understanding of what's happening. You already knew both outcomes were possible. You already knew neither one would define you. The trade comes in, you execute your rules, the outcome lands wherever it lands, and you move to the next trade with your internal state unchanged. That is the carefree state. That is what Mark spent 30 years pointing toward. The path from where most traders are to that state is not a straight line. It runs through the microlive protocol and the pre-entry emotional scan and 30 sentences of emotional data and the gradual, patient work of introducing yourself to the survivor and learning to function alongside it rather than being controlled by it. It runs through a willingness to accept that the gap between your demo self and your live self is not a problem to be ashamed of, but a territory to be explored. It runs through an honesty about your identity stake that most traders spend their entire careers avoiding. None of this is fast, none of it is easy, but all of it is possible. And all of it leads to the same place. A trader who is free, genuinely, experientially free from the need for any particular outcome. Because a trader who doesn't need any particular outcome is a trader who can execute perfectly on every trade. And a trader who executes perfectly on every trade is, over time, a consistently profitable one. The market doesn't test your strategy, it tests your beliefs. And your beliefs, unlike the market, are entirely yours to change. That is the most empowering idea I know in all of trading. The market is outside your control. But the beliefs you bring to it, the way you experience each outcome, the meaning you assign to each loss, the size of the identity stake you carry into each trade, those are yours. They were built by your history and your experience and the things you taught yourself without realizing you were teaching yourself anything. And they can be rebuilt deliberately, consciously. With the practices we've talked about today and the patience to apply them for long enough that they take hold, that's the work. That's what Mark Douglas dedicated his life to. And if it sounds like it's worth your time, I think you already know it is. If any of this has landed for you today, not just as interesting ideas, but as something that touches where your actual trading struggle lives, then consider subscribing. Not because this channel needs it, but because the version of you that heard this, that felt the recognition in it, deserves to keep receiving the kind of content that helps that growth continue. That version of you is the one worth investing in. And that's the only reason I'd ever mention it. I want to say one more thing about the survivor, because I think it's the most misunderstood character in all of trading psychology, and it deserves more credit than it usually gets. Most traders, when they first encounter the idea that they have an emotional self that interferes with their trading, relate to that emotional self as an enemy, as something to defeat or suppress or discipline into silence. And that framing is not just unhelpful, it is actively counterproductive. Because you cannot suppress the survivor, You cannot outthink it or outlast it or outsmart it. It has been with you since before you could speak. It is faster than your conscious mind and louder than your reasoning, and it will always be there, sitting in the room with you every time you trade. The traders who make peace with it are not the ones who finally overpower it. They are the ones who stop fighting it and start learning its language. The survivor speaks in sensation, a tightening in the chest, a quickening of the breath, a sudden urgent desire to do something, anything, to change what's happening. When you begin to recognize those sensations as the survivor's voice, rather than as signals from the market, everything shifts because now you have information rather than compulsion. The tightening in your chest is not evidence that you need to exit the trade. It is evidence that your nervous system is responding to real financial risk the way nervous systems do. It is expected, it is normal, and it is not a reason to deviate from your rules. In fact, with practice, the sensation itself becomes a cue to pause, to name what you're feeling, to return to your rules rather than to your impulses. The survivor stops being your enemy and becomes a kind of alarm system, reliable, predictable, useful once you understand what it's actually telling you and what it most definitely is not. This is the sophistication that separates traders who make it from traders who don't. Not the sophistication of their technical analysis, not the sophistication of their risk management spreadsheets, the sophistication of their self-model, the depth to which they understand their own psychological patterns under pressure, the clarity with which they can distinguish between the analyst's voice and the survivor's voice when both are speaking at once. That distinction is a skill. It can be learned. It is learned through practice under real conditions, which is exactly what the microlive protocol is designed to provide. Real conditions, managed carefully, observed honestly, logged faithfully. 30 trades, 30 sentences, the beginning of a self-model precise enough to be genuinely useful. And I want to circle back to something I said at the beginning because it lands differently now that we've been through this together. Demo trading doesn't make you a better trader. It makes you a better pretender. The trader you become through 6 months of profitable demo sessions is a real person with real skills, technical skills, analytical skills, pattern recognition skills. None of that is fake. But that person has never met the survivor, has never operated in its presence, has never had to hold a rule steady while the survivor is screaming at them to abandon it. And so that person, as genuinely capable as they are, is not yet a live trader. They are an analyst who hasn't been tested. The test is live trading. The preparation for the test is not more demo, it's the deliberate, structured, honest introduction to the survivor that only real stakes can provide. Mark Douglas understood this in a way that very few people who talk about trading psychology ever have. He understood that the problem was not knowledge. He had written the book. Literally. The problem was the gap between knowledge and embodied experience, between what you understand and what you have actually lived through and integrated into the way you move through the world. Closing that gap is not an intellectual project. It is a behavioral and emotional one. It requires you to show up, repeatedly, in conditions that produce the full range of your psychological response to trading, and to stay conscious and observational while it's happening, and to gradually, through practice and patience and honesty, build a set of beliefs and behaviors that can hold under that pressure. That is what Mark gave people. Not strategies, a path toward that integration. If you're profitable in demo and losing in live, you are not broken. You are at the beginning of the real work. And the real work, unlike the demo work, is the work that actually leads somewhere. There's one final idea I want to leave you with, and it comes from something Mark said in an interview late in his life that I keep returning to. He was asked what he would tell a new trader if he could only say one thing. And he said, "Learn to want what the market gives you, not what you came to the market to get." I've thought about that line more times than I can count, because on the surface, it sounds almost passive, like he's saying, just accept whatever happens, don't have goals, don't have expectations. But that's not what he meant at all. What he meant was this. When you come to the market with an agenda, a specific outcome you need, an amount of money you need to make today, a validation of your analysis that you're looking for, you have already compromised your execution. Because now you're trading toward a specific result rather than toward a specific process. And the moment you're trading toward a result, you're making decisions based on what produces that result rather than on what your rules say to do. You're holding losers because a loss right now doesn't fit your agenda. You're overriding your exit signals because you need more from this trade than it's offering. You're taking trades outside your system because the ones inside your system aren't happening fast enough. To want what the market gives you is to come to the platform with no agenda except the execution of your process. It is to be genuinely willing to have a flat day, genuinely willing to have no setups present themselves, genuinely willing to take 3 small losses in a row and close the platform and call it a day, knowing that 3 small losses taken by the rules are 3 perfect trades and the best result you could have achieved. It is a form of trust, trust in the process, trust in the edge, trust in the distribution to work out over time, even when today's slice of it looks nothing like what you hoped for. And that trust is not built in demo. It is built in live trading, slowly, one honest trade at a time, with the survivor acknowledged and the analyst in charge, and the self-model getting more precise with every session. That is what this is all about. That is what profitable live trading actually requires. And that is the truth that a 6-month demo streak, however impressive, will never be able to give you.